10 a.m. right here in Lagos, Nigeria. Good morning and welcome to another 55 minutes of business conversation right here on Business Morning. It's the second one for the week. I'm Ili John Mekwa. Let's start off with oil prices. The prices fell on Tuesday, extending losses from the previous session after economic data from China, which is the world's largest crude importer, spurred fresh concerns about a potential global recession that could hit energy demand. Brent crude futures fell by 90 cents to $94.20 a barrel, while WTI crude futures fell 81 cents to 88 cents a barrel. Oil futures fell about 3% during the previous session. China's fuel product exports will rebound in August to near the highest for the year so far, after Beijing issued more quotas in June and July, although broader curbs are yet to cap shipment at 7-year lows for 2022. In the United States, total output in the major U.S. shale oil basins will rise to 9.049 million barrels a day in September, and that will be the highest since March 2020. That information is according to the Energy Information Administration. And from oil now, let's go to commodities. The United States Department of Agriculture has rated 57% of the national corn crop in good to excellent condition in its weekly progress report. And that's down 1% point from the previous week, but just above analyst estimates. In a report released yesterday, the USDA also rated 58% of the soybean crop as good to excellent, and that's down from 59% the previous week and matching trade expectations. Stressful weather during August can threaten the yield potential of corn and soybeans in the United States, which is the world's biggest corn supplier and the #2 soybean exporter after Brazil. August is a particularly important month for soybean development, when much of the crop is set pod. Some 28% of the U.S. corn production and 24% of soybean production was within an area experiencing drought. On the 9th of August, the USDA said that separately, mostly in areas of Mississippi River. And then we come to Nigeria, where the annual inflation rate in the country has climbed further as rising cost of goods and services continue to take a toll on the country's currency and livelihood of its citizens. This latest uptick, which also comes amid upward pressure from the increase in the price of solid and liquid fuel, follows the impact of the ongoing Russia-Ukraine war, which has caused significant rise in global energy prices and food supply.
And just as economists had predicted, Nigeria's headline inflation rate climbed higher to a 17-year high, 19.4% in July, up from 18.60% recorded in June. This is according to the latest report released by the National Bureau of Statistics. The figure, which also marks the 6th consecutive monthly rise in inflation, is 2.27% higher on a year-on-year basis than 17.38% recorded in September 2005. A breakdown of the NBS data shows that Nigeria's urban inflation rate rose by 2.08% to 20.09% in July 2022, from 18.01% recorded July the previous year, while the rural inflation rate jumped from 16.75% to 19.22% on a year-on-year comparison. Both indexes were unchanged within the comparative month. Interestingly, the food inflation rate in July declined by 0.01% to 2.04% in month-on-month contrast against the 2.05% rate recorded in June 2022. And this is attributed to a reduction in the prices of basic food items such as garri, yams, maize and vegetables. Similarly, food inflation over the previous 12-month period dropped by average 1.42% to 18.75% from the average annual rate of 20.16% recorded in July 2021. The economic interpretation of the rising inflation number means that Nigerians are not able to purchase as much goods and services with their monies, as the value of their income has been eroded due to rising costs.
We'll certainly follow up on that. While we had an elaborate conversation on that on the news at 10 yesterday, this morning we'll also follow up on that with Adesola Sumoni. He's an analyst with Financial Derivatives Company, joining us from Reading now to talk about this inflation. Hi, Adesola. Been a while. Good to see you.
Good morning, Ines. It's been a while indeed. Yeah. Good to see you too.
Yeah. Well, we're not seeing you on a very good note, even though I know right there in the UK, by now you're used to inflation, recession, and all of that. It seems even tighter there. But, I mean, let's look at Nigeria now. This didn't come as a surprise because FDC, it's within the range of FDC's prediction. And so is this all about the energy costs? Because we see that food inflation is tapering. So is this more about the energy costs? What's really driving inflation this high at this time?
Thank you for that question, Ine. Like you mentioned, Nigeria's headline inflation has increased for the 6th consecutive month to 17-year high of 19.6%. And many factors are responsible. One is higher food and fuel prices, particularly coming from the Russia's war in Ukraine. We also have higher diesel prices, which is quite significant. If you look at the numbers, the data for a liter of diesel around January this year was costing around 250 naira or 300 naira per liter in some parts of Nigeria. But as at now, that has increased to around 850 naira per liter to some parts of Nigeria. And given the Nigeria's the nature of the electricity supply in Nigeria, there's a lot of dependence on diesel-fired generators and also for transportation. So that has big implications for inflation. We also see the currency weakness. I think one of the bigger issues is the currency weakness, is given that Nigeria is still heavily dependent on imports. So the import bill is quite huge, and then what happens is many of the suppliers simply just pass some of these costs down to consumers. I mean, that also depends on the elasticity. But these are factors that are driving inflation higher at this time.
Yeah, well, it's not strange. It's not just in Nigeria. I mean, over there in the UK, it's about the same thing. And we hear the talk about energy costs and all of that. But what is different about Nigeria? Because a lot of people have said that if the variables were better handled, Nigeria would not actually be this, I do know that even in Turkey we do have inflation up to about 80%, but they have droughts to deal with. Nigeria doesn't have drought to deal with. So if the variables were better handled, do you think that perhaps we would have escaped, even if it's a part of this high inflation?
Let me give you some context in it. So first, let me say that this is not specific to Nigeria. Like globally, even here in the UK, let me just give an example. Every day for lunch, I have a meal deal, sandwich and some crisp. It costs £3.50. Everyone knows that. But you go there today, it's £4.50. I'm like, come on, this is a country that usually has 2% inflation. Now inflation is at a 40-year high. If you look at our neighbors in sub-Saharan Africa, look at Ghana, for example. Ghana's inflation for July is at 31%. Right. We also have other countries like Uganda, 7.9%, which is relatively low, but they registered increase in inflation in July. We have Zambia also 9.9%, up in July. Kenya also 8.3%. So this is not a specific to Nigeria. What makes Nigeria's inflation quite higher is a host of factors. Number one is the exchange rate issues. That exchange rate is going to be the bane of Nigeria. We've been talking about this for ages. We're going to keep talking about it because Nigeria imports quite a lot of raw materials. For instance, flour. The price of flour also has increased sharply. And because we also import that, we import a lot of flour, and the exchange rate has weakened, the costs the import bill is simply significantly higher. So we have the exchange rate issues. We also have security issues, particularly in insecurity issues, I beg your pardon, particularly in growing areas. So we have conflicts in many of the growing areas, which reduces the amount of production, and that also factors into inflation. I'll give you an example. If you look at the price of some commodities for some domestic commodities, look at, for instance, the price of tomatoes. The price of a 50 kg bag of tomatoes is up 80% to around 45,000 naira. If you look at peppers also, peppers are up around 66% to 30,000 naira. That's a 50 kg basket. But onions are also up 28% to 32,000 naira. So that insecurity is also driving inflation significantly higher. Finally, the cost of diesel. I mentioned earlier that cost of diesel has increased sharply this year alone, mainly due to what is happening, the Russia's war in Ukraine, which is passing through to the cost of diesel in Nigeria. Also take into account that the diesel is deregulated. So as the price of crude oil in the global market goes higher, the price of imported diesel also increases.
But for 4 months now, we've been having reports that global food prices is tapering. Where is that? Where is it? Is it in the UK? I don't think I've seen it in Nigeria.
Indeed, the price of food index globally is tapering, but again, it's the exchange rate, right? You know what happened over the past couple of months. The exchange rate has been very, very volatile, particularly at the parallel market. And also because many of these Nigerian importers cannot access their needs, their FX needs from the official market. So they have to go to the parallel market, and the inflow into the parallel market is small. That is why the price keeps rising. The price of the dollar in the parallel market keeps rising so sharply. And because when we import these things, the suppliers, the producers simply pass on some of these costs to the final consumer. So I think that's the big issue, the exchange rate challenge. And the handling of the exchange rate by the central bank is another issue which I would not like to delve into today. But that has also worsened, I would say, the exchange rates issues in Nigeria. Also, even if you look at Nigeria as an oil exporting country, we are supposed to benefit, right, from the higher oil prices in the global commodities market. But many factors, limit the kind of benefits that Nigeria is able to get. One is oil theft, right? We every day read the news, we hear that there's some vandalism to the oil infrastructure, there's some oil theft, and all of these factors simply reduce how much Nigeria can, the FX, the oil earnings Nigeria can make from the higher oil prices. Also, take into account the subsidy, right? I just read this morning that for the first 6 months of this year, Nigeria spent 1.6 trillion naira on food subsidy.
You just hang it there, Additional. I don't want to elaborate on that because, that subsidy, it's obviously a huge bill on Nigeria's budget because I think now we're talking about 7 trillion naira, and already debt servicing is higher than revenue. And if we continue with that subsidy, I don't even know how we are going to fund that. And now the NLC is asking government to increase workers' salary by 50%. The government says the country is broke, so it's a complicated cycle we see there. And then the oil, as you mentioned, we discussed it elaborately yesterday. The issue of oil theft is right there facing us and chopping off what we would have had as revenue. But talking about oil prices, China led the prices down. I think it's been down since yesterday, 3% yesterday, still down this morning. What's going on? Is it COVID again?
Exactly. So, for context, China plays such a big role in global commodities market. They are the largest importer of most commodities, the largest buyer of most commodities. For oil, they are the biggest importer of oil globally. For copper, China alone accounts for around 15% of global copper imports. So they are the biggest buyer of copper as well. So whenever there is economic slowdown, for instance, we register slower than expected growth in China across many sectors, that simply weighed down on global oil demand, and also has some implications of the impending recession that economists keep talking about, global recession. So essentially, that's what's happening. And what is happening in China? China has this zero COVID policy. Once they have a COVID case, they lock down. There's serious, strict lockdown. That has implications for economic activity. That's exactly what has happened in China. In fact, economists are now revising downwards GDP growth for China for the rest of the year. Some economists have revised it downwards from around 4.4% to 4%. So that is exactly what is happening. But in addition to that, we are seeing a stronger US dollar. We know that oil is denominated in US dollars. And when the dollar strengthens against the basket of other currencies, we find that oil becomes relatively more expensive to holders of these other currencies. On the supply side, we are seeing there's talks about this Iran nuclear agreement, that there's some renewed talks about it, that an agreement will soon be reached. Once that agreement is reached, we are going to see some new oil coming online from Iran, which is going to taper prices a little bit.
And I also think I read something about Saudi Arabia to boost its outputs also. This might, of course, also affect price and bring it down even further.
Yes, indeed. Yes, indeed. We know Saudi Arabia is the largest OPEC producer, and if they boost their output, definitely OPEC's output is also going to increase. But take also into account that there are some members of OPEC who are still not able to increase their production. Nigeria,
like Nigeria.
We also have Angola,
yes.
who is able to increase.
So do you see the world being able to move on without Russian oil? Europe is threatening that by the end of the year they're going to win themselves. Do you see, with maybe if the Iran deal is cleared and then Iran adds its supply, even though Iran and Russia are friends, and then you also have Saudi Arabia boosting its production, do you see the world able to move on without supply from Russia, at least to an extent?
Yes and no. Russia is such a big player, right? If they were a marginal player, then yes. But Russia is such a big player. It is extremely. It can happen. It's just that we are going to pay the cost, right? For instance, I'll give an example. Look at natural gas. Russia is one of the biggest producers of natural gas, right? Europe has been struggling to wean itself off Russian natural gas, and what the next biggest producer is the US, right? The US is producing at capacity. Right, they can't produce anymore except there's new investment in natural gas infrastructure. But yet it is not sufficient to meet the demand. So that's exactly what's happening. Even if Saudi Arabia is producing at capacity, even if Nigeria and Angola are able to increase their oil production significantly, it's still not enough to fill up the gap that will be created by a world without Russia. So prices will definitely still remain elevated.
And Nigeria could tap into that. And cocoa prices have been going up. I think it's about a month now or more. We've seen a rise in the price of cocoa.
Well, thank you for that question, Ini. Mainly is due to fertilizer issues in Ghana and Ivory Coast, right? So again, Russia is one of the biggest producers of potassium. Is it potassium or potash? Potash. And potash is used to make fertilizer, right? So because of these war issues, because of the war in Ukraine, there are issues around fertilizer production, and as a result, producers in Ghana, producers in Ivory Coast, which are the largest producers of cocoa in the world, they are concerned about the output for next year if they are not able to acquire or obtain sufficient fertilizer for planting this season. So that's exactly why prices are rising. Concerns about fertilizer. But it's positive for Nigeria, because Nigeria is also one of the biggest producers of cocoa globally. But in terms of the impact on the external results, it is very, very tiny.
Yes,
very, very tiny.
Exactly, because we have the president of Cocoa Association some weeks back, and he told us how sad he is that we're not able to, in fact, even scratch the surface of cocoa production. So imagine if we were able to, this issue of boosting the external reserve, we don't have to look at just oil. This would have been one way to actually do that at this time.
Exactly.
All All right, Adesola Sumoni, it will be good to have you again on Thursday. We have missed you. Good to see you.
Good to see you.
Yeah. All right, so that was Adesola Sumoni, analyst with Financial Derivatives Company, and I'm sure we'll have him again on Thursday, another Commodities Day. For now, we'll take a break. When we come back from that break, we'll continue our conversation on how we could boost Nigeria's foreign reserve. It's still very top on our minds. This is Business Morning on Channels Television. Welcome back. You're still watching Business Morning here on Channels Television, and we're still on how to boost Nigeria's foreign reserve. Well, records note that while non-oil export is increasingly becoming a major source of foreign exchange earnings for Nigeria, accounting for just 11.32% of total exports in 2021, oil still contributes about 76% of the country's total exports, and that's according to the National Bureau of Statistics. So what can we do from here? We have Dr. Bamidele Ayemibo, lead consultant with 3T Impex Consulting, joins us for that conversation. Good morning, Dr. Bamidele. Thank you so much for joining us.
Good morning. How are you?
Great. And you? Well, this is not a new conversation. The federal government has talked about diversifying the economy for, many years now. But I guess as someone who is practicing in that area, would you say we are making progress? We see that last year, the non-oil exports was just about 11%, 11.3% thereabout.
Yeah, we're making progress now. The effort that has been made this year is generating some positive feedback, according to what CBN governor said at the last conference that was done by CBN I think it was in June or July. So now there is a deliberate effort. Before now, we've not really had deliberate effort towards growing export in Nigeria. We've been diversifying by mouth, no direct effort in terms of policy in that direction. But now we are seeing that, as a matter of fact, one of the things I think is helping the result the CBN seems to be getting, at least some increase in inflow coming in, was because of the incentive they are giving to exporters. Because, think about it. You are in an environment where inflation is almost approaching 20%, and you are going to export, and then you are going to bring back your money, the foreign exchange, and you are going to be exchanging it in a window that is almost 200 naira from the parallel market. But your cost for that export was incurred based on the expenses in the parallel market, because some of them will import raw materials to be able to manufacture, and they're going to source forex outside the in window to be able to bring in those raw materials to produce. But they are expected to be able to sell in that window. What CBN is doing right now is to support such businesses that are adding value in export by trying as much as possible to give them some I would call it palliative, 65 naira to $1 if you're able to repatriate. Now, so that seems to be generating a lot of interest. But more importantly also is, not that we are not exporting as a nation, we're actually exporting, but we are doing a lot of commodity export. So if I'm exporting commodity, I really do not generate as much income as those that are adding value to it. So let me give you a good example. I like to use the example of cocoa, that the total market size is about $9.35 billion. Total market size in the world. And West Africa, including Nigeria, is contributing about 75% of that export. But guess what? The Netherlands, the German, the Switzerland, the UK, adding value and producing chocolate, that market is about $29 billion. So who is really making money? So if we export a lot of cocoa, the highest we'll get is about $10 billion, even if we are the only one exporting it in the world. However, if by just adding value, we'll be able to tap into the larger market of about $29 billion. So there are a lot of effort being made, and a little result seems to be generating. I'm hoping that the government will be able to keep up with this.
So I would have asked, why are we not adding value? But we both live in Nigeria, and I think, the answer is quite obvious. So I think I would rather ask, Are there ways? I mean, it's good you brought up the issue of cocoa, because we just discussed cocoa in our last conversation. We mentioned it. With the prices increasing at this time, it's not just oil that Nigeria can benefit from. We can also benefit from this. And then we had the president of the Cocoa Association a couple of weeks ago, and he talked about why they are not even able to maximize even the cocoa production, not even adding value. The issue of seedlings, the issue of access to land. You know, so it's good you say that. It's comforting that you say, or from an insider's point of view, that the government is making efforts. But you know, when we have some of these basic needs still unmet, the issue of seedlings still unmet, access to land still unmet, you know, and we are here talking about it every day, we just wonder, what else can we talk about? Where else can we go?
You know, in grain and foreign reserve, export is a major, agri export is a major area, value addition, but there are so many other products within the space also. For example, soya beans. I mean, just laying credence to what you said earlier, soya beans, if we want to do commodity, like I often say that, if we want to do commodity, then let's focus on commodity that really are of large demand in the world. So, for example, Nigeria export cocoa, cashew, ginger, gum arabic, sesame seed. If you add the total market size together, it's not up to $20 billion. But the market size for commodity like corn is about $30 billion. Market size for commodity like soya beans is about $60 billion. So you say other commodities that we really can begin to also focus on to be able to generate this foreign exchange. And I mean, if we are having issue with being able to have access to land, then that become a challenge. I mean, if the Cocoa Association are saying that because in Nigeria today, we are looking for forex, and we need to generate this forex, and we want to export to generate this forex. I think it's just working with the state government to be able to have access to those land, to be able to cultivate as much as possible. Because it's been told that Nigeria have not cultivated up to half of its arable land. And think about this, 70% of our farmers are said to be peasant. We've not cultivated up to half of our arable land. We have over 30, 40%, over almost 50% post-harvest losses. But Nigeria is among the top producer of most exportable commodity in the world, but we are unable to export those products. So while we are fixing production, we should also look at quality issues, which NEPC is doing a lot in that regard, and also look at market development. So while we are increasing volume of production, quality issue become important, market development become important. But for me, I think while we are increasing volume, we should just support as much as possible value addition. Look at this. You know, some states in Nigeria are said to not be viable. And I'm asking myself, how can you say a state is not viable and the state is producing products that the state can export itself? I'm wondering, why can't state government in Nigeria take it upon themselves to say, look, we as a government, partnering, for example, a state that produces a lot of palm kernel can partner with Okomu Oil or any of the oil palm producing company in Nigeria and begin to export it as a state and generate foreign exchange directly. Why is it that we have to wait? We are looking at generating foreign exchange. Why do we have to wait for Abuja to be able to give us money? Now, the money is not there. We're not getting enough money from export. I mean, from the crude oil export. Why can't Nigerians say, and this is the time to have this conversation because now election is coming. Nigerian people, citizens, begin to ask your state governor, I'm going to build road, I'm going to build a skyscraper, I'm going to build school, I'm going to build hospital. How will you raise the money? Exactly. State government should begin to see the need to export. Just the way federal government export oil and generate money from export directly yourself.
You know, I really appreciate that point you brought, because when politicians are being interviewed at this time, it's so easy to say, oh, I'm going to make the naira at par with the dollar, I'm going to build road and build railways, and now the country is broke. What are you going to use to actually fund that? And the issue of state governments, we've been talking about it, and state governments also have their own, well, reasons. You know, some of them say, oh, the exclusive list stops them from maximizing their resources. You know, they don't know where to start. Some of them can't even pay workers. That is a lame excuse. When the governor of Ekiti State was there, he made an offer to them, look, you guys should begin to export this thing yourself. Nothing is stopping the state government in Nigeria from forming a special purpose vehicle with a private organization, set up an entity.
and work with it. You can bring in technical partners who will come and explore mineral in your state, and you export those minerals, and you pay royalty to the federal government. So the exclusively does not stop the state government from registering limited liability company with a public-private and private sector and explore the mineral in their state for export. No law is stopping them from doing that in Nigeria. I think the challenge for a governor is that when you have a governor who knows he will be able to pay salary even if you do nothing, if he does nothing from January 1 to January 31st, he will still pay salary. There's no incentive to work. So now there is no money. We should be asking them, how will you make money? How will you create jobs? How will you generate revenue? Don't tell me you tax people who are not even being paid salary. Don't tax me that. You collect your tax, no doubt, but that tax is not going to be enough because you're not even paying salary in the first place. So why don't you look at what you produce in your state? Look for businesses that are in that space you can partner with. Do you know that they can actually partner with even the citizens? Let me give you an example. I serve in Jigawa State, and someone will tell me Jigawa State is not viable. Jigawa State produces sesame seed. Jigawa State can get its citizens to produce sesame seed. Government give them land, give them seedling, give them all the support, and give them a guarantee. Cooperative in every local government, give them a guarantee that we will buy all this sesame seed when you produce it. Everybody goes to the market to produce. You are creating jobs. In 3-4 months, when it's ready, your partner you are working with, is a specialist in export of this product, is able to get it from the collection center, clean them up, bag them, look for buyer, export them. When the money come back, pay the farmers who are supplied, maybe after 3 months or 6 months. Share the proceeds with the company you are working with and have enough funds for the state. This model will help the state government, not just to create jobs, but to generate revenue. So there's no way the state government can say they are not, there's no exclusively not stopping you from exploring either the minerals or export of commodity in your state.
You know
that of course we are going to be able to generate the point we are looking for.
That also reminds me that the RT200 by the CBN, they also have space for state governments, to be able to also benefit from that scheme. But I don't hear a lot about their participation. It's more about the individual exporters who are jumping on that platform to make some of those money that the CBN is offering.
Yes, in fact, in the RT200 there are 5 pillars to it. The first one is on expanding the production of the value addition, that's processing, then expanding the production of the raw materials so that we have enough for the processing. The third one is incentive. This is 5 naira to $1 that CBN is giving. The fourth one is what you just mentioned, partnering with state government to build terminals in their location to be able to do export clearance at the terminal. And if it's a state that is not landlocked, it can easily get a badge and move it straight to the next port, either in Port Harcourt or in Lagos, for them to be able to ship it out. So that means the state can actually partner with CBN. CBN said to make funds available with the state to be able to build those terminals so that if I am in a state far away from where there is, there is a port, we can have a terminal there where the good can be cleared for export. Customs are there, not the agencies are there, and we can move the goods straight to the port. And like I said, the state government can do this for themselves, for the state government to generate income. If the state government gets involved, we're not going to generate a lot of revenue in terms of foreign exchange, and of course, that will probably help us at the end of the day to overcome this current challenge we are facing, because then they will be able to galvanize their people, and of course, having enormous resources to be able to support the people to produce large enough for us to export. Because things right now, we have enough land to export, to produce and export, but we are not exploring it at all. And the fact that we're going through this challenge become important. For example, let me talk about importers. Importers in Nigeria today are having huge challenge getting foreign exchange. An importer is almost ready for export. In my opinion, 60% ready for export. All he needs to do is to set up an export desk and begin to look for commodity they can export, or they can actually export their own product. Think of a company that imports battery from China, for example. You are importing lead battery from China. If you import lead battery from China, lead oil is in Nigeria that you can export to your manufacturer, who can in turn produce battery from it, and you can bring it to Nigeria. So you can have a symbiotic relationship, even with your manufacturer producing those products for you. So importers that are currently looking for forex is another area. They have a lot of naira, looking for dollar, up, down, looking for dollar, but they can generate this dollar themselves. CBN has said, look, go and generate your dollar yourself so you can be able to fund your transaction.
Yeah, well, Dr. Bamidele Ayemibo, sorry. Interesting conversation that we do hope that the state governments can actually cash in on this. It's not new, it's right there in our faces. And we do wish, you know, that somebody will cash in on this and make a change in the landscape of especially our foreign reserve and even, you know, the value of the naira at the end of the day. Thank you so much for your contribution.
Thank you.
All right, so well, here in the media, we have to talk and sell the idea and do hope that someone out there is listening and will implement it. That is what we do hope here on Business Morning. Well, now let's shift gears and go to the market and see what the market, we do know that the market did close in the red yesterday. There we go. Those are the figures. The all-share index in the equities market was down 0.07%, and then equities cap. We don't have that 27 trillion naira. We don't have it yet. We're still looking forward to it. Somebody said we might have to stay here for a bit. I hope not. You know, for 3 weeks now, but 2 weeks now, we'll be having the surface of the bowl, maybe on Friday or in the middle of the week. We're looking forward to that relief, at least for one day, if not for all the days of the week. Let's see the activity of yesterday, how we did in that. Of course, when we look at the activity chart, it was more in the red yesterday. Volume was almost 211 million. That's 210.83 million. Value 2.19 billion, and deals was well, more than Friday were about 3,000. That's just a transaction there. And then looking at the sectors, banking, our favorite sector, I would say my favorite if it's not yours. This one, Zenith Bank really did help yesterday because we saw that Access Co was down, GT Co was down, FBNH was down, but Zenith gained 45 kobo, and that brought the counter to the green. So that was a huge move we saw there. Consumer goods was down 0.59%. Industrial goods in the positive, also made it through. Insurance was unchanged. Oil and gas was in the red yesterday. Let's see if we have Afola Big Ben Road to talk us through the markets of yesterday, just before we go to the unlisted markets. Afola, are you there? Good morning.
Yes, good morning, Nini. Thank you for having me.
Great. So we've noticed that at least one day in the week we see the bull just show us and give us a little bit of relief. Are we expecting that this week, or do we expect that we'll just stay in the red till the end of the week?
It is possible that we will see the bulls come up again. We are seeing prices at attractive levels for a number of investors, and so we are seeing that they are trying to take advantage of these prices. When supply thins out, then investors tend to pay up a little bit more to get some stock. But unfortunately, there's still a number of sellers out there in the markets, which is why whenever we see that short boost up, the market tends to come back down in terms of prices.
So we saw yesterday the banking sector. I was surprised. I was expecting it to end in the red when I saw that Access Co was down, FBNH was down, I think GT was down, and then just Zenith was able to pull the market, pull the counter to the green.
Yes, you're right. So Zenith was the one that helped the banking sector yesterday. There was some aggressive buying up to around 2170 levels in the market, and the supply also wasn't as aggressive as opposed to the case of GTCO and Access, where there was ample supply in the market. So that's why those names didn't go. But Zenith was able to help pull the banking sector up on the back of sort of aggressive demand.
And then out of nowhere, eTransact topped the list. I mean, I can't remember the last time eTransact made the news on the NGX. And then out of nowhere, we saw it top the trades yesterday.
Yeah, so that was a structured transaction that was done. About 50 million shares were crossed on the floor of the NGX. And that's what shot eTransact up in terms of the volume traded charts.
All right, Afolabi Benro with IBTC Stockbrokers. Thank you so much for sharing your thoughts with us this morning.
Thank you for having me.
All right, so there you see the unlisted market. Yesterday, only 7 deals worth 23.15 million, and volume was 119. If we could see the fixed income markets and see how we did on that market, the CBN bills, there you have it, 6 deals. Very quiet market, but we did hear from our analysts yesterday we could expect some movement. The August 2022 had 6 transactions on it. So if we see the open market also, open market had 12 deals yesterday. The OMO bills had 12 deals. There you go, yesterday worth 53.11 billion naira. We'll be following and see if something can push the market. We're expecting some liquidity, I think, from today, and then we'll see if that will make a little bit of move in the market. Let's take a break now. When we come back, of course, there are other parts of Business Morning here on Channels Television. Just join us then. Welcome back. You're still watching Business Morning. While the equities market is not looking so good, I think crypto is maybe gradually gaining grounds. I don't know, but Ladi will confirm that. Ladi,
yeah.
I see that your fair greed is even better than yesterday.
Yeah, it's better than yesterday.
Yes, we're getting close to greed.
Yeah.
Don't be too hopeful.
But I feel like it might take a while to see greed because there's still so much, caution, with all of these markets. I kind of
feel that something is going to happen and bring it down. That's okay. So the
catalyst is downward. You're looking for.
Yeah.
I'm looking for upward, but let's see. It might come. But we're at 44 points this morning. Let's see the market cap. Let's see what's happening there. We see it's $1.14 trillion. If you flip over to the market cap there, we see that's down about 1.35%. And we see volume traded $73.66 billion. That's up about 3.43%. We're seeing volume coming in this morning. Bitcoin dominance there, 40.16, down marginally by 0.08%. Let's see what's happening with the price of Bitcoin this morning there, $24,014 there, just marginally up 0.28%. We did have the bears push down the price from that 25K. We got to 25K on Sunday, but we see that battle raging between the bull and the bears at that price. Hopefully some catalysts can take it above that. Price of Ethereum now, $1,880. This crossed $2,000 over the weekend. Volume traded $18.87 billion there for Ethereum. Let's look at the top alts by market cap there. We see BNB up 0.08%. That's the token for the Binance exchange there. Marginally up this morning. Cardano, 55 cents, up 0.21%. We see eCash also in the green. The biggest mover this morning, up 1.78%. We see XRP, the laggard there, up 0.04% at 37 cents. Let's bring in Bjorn Martins now, CEO, Passive Income Token. Hello, Bjorn. Great to see you after a long time.
Good to be here, Ladi Williams. Thank you for having me again.
Yeah,
good to be here again, of course.
Yeah, great to have you, Bjorn. So I saw a report yesterday showing about 700 extra tokens were added to the crypto market, even though there was that downturn in the market. So it's still over 20,000 tokens, Bjorn. I'm wondering, do we need more tokens in the crypto market?
Definitely not. There's a big no, honestly. As everybody can know, 20,000 cryptocurrencies is unnecessarily a lot for the markets we're in at the moment. We don't even have that much of a utility yet for cryptocurrencies, as the most used utility at the moment are stable coins, where you can really pay something with, and Bitcoin, of course, as a store of value. Next to that, we got blockchains where tokens can operate on. But 20,000 tokens is way too much, and again, 99%, as I always said, will disappear off these tokens.
Right, and looking at these tokens now, all of them claiming to disrupt one industry, or the other. So what do you think investors should be looking at? You go into the market now, you see over 20,000 tokens. What should you be looking at to separate the chaff from the real projects?
So as you see as well, of course, the top 100 are the real big tokens. They got a market cap of over $1 billion, and these investments are more seen as a little of secure investment. As soon as you're going to go invest in one of the other 90,900 tokens, you're going to go to micro caps, small caps, basically the same as penny stocks back in the .com bubble. It's a high risk, so if you want to take that risk, do good research, check if there are real owners, check if they're have a good concept for their token and real utility that can drive the price in the future. And always, try to dollar cost average back to the big tokens as Bitcoin, Ethereum, Solana, the bigger boys in the game.
Yeah, talking about the bigger boys in the game, it almost seems like when you're coming to that market, maybe you don't want to go past the top, maybe 500 tokens. What do you think?
I would say you can look a little bit further as well. Of course, it's a higher risk the lower you go in the ranking. But yeah, as we chatted yesterday as well together, like it was a lot more easier when the whole token market only existed out of 1,000 tokens. And of course, there are always really good investments in these ones. There are new ones coming up, but it's a high risk. Everybody that starts in cryptocurrency, I would recommend just stay with the top 100 at first, get to know the market, get to know these tokens that operate for a longer time on a higher market cap, and see why they operate on such a high market cap.
Right, I guess don't go into the market and maybe say mini, mini, mo, which one's going to go up. Yeah. All right, thank you so much, Bjorn. Always great to have you.
Thank you, Ladi. Have a good day, man. See you later.
Too. All right, now, let's flip over to the top gainers. Let's see who's topping the gainers list. We see it's Chile's token there. It's up about 19.96%. That's a double-digit gain we're seeing for Chile's token. They're one of the fan tokens. It's 20 cents. ANKR, that's been moving for a while now. It's up about 7.57%, 4 cents. And we see GMT there, one of the move-to-earn tokens there, $1.08. We're seeing that industry quite quiet for a while now. We see Doge, the king of the meme coins, back on the top gainers list. It was there it's like 3 days now. We're seeing a Dogecoin there, 8 cents, up 5.24%. We know that's Elon Musk's favorite token in the market. We see, let's see what's happening with the top 5 losers there. Celsius, the biggest downer this morning, 25.76%. They have that issue with their liquidity there. Uniswap token there with decentralized exchange, that's down 4.70%. GRT, the graph, 13 cents, down 4.29. We see Flow chart there, down 3.19%. So we're seeing a huge battle between the bears and the bulls in the market right now. So it depends on what catalyst we might be seeing coming into this market that could take it.
What are the possible catalysts?
For now, we're still looking at, U.S. for some data. We saw China data that came out, pulled the market back, but we saw the market actually it shrugged that off real quick.
If it was the United States, I think the market will still be bleeding at this time. Yeah,
even though,
but I think that market generally are kind of adjusting to the realities of now, which is high inflation, high interest rates, liquidity squeezed, and and they seem to be adjusting to say, oh, this is our new reality. Let's just deal with it.
Maybe we could just stay invested regardless. So it's risky though.
Yes, it is risky. Well, thank you so much, Laddie. You're up again at 1:30 for Business Incorporated.
All right, see you then.
All right, for me, I'd like to say thank you so much for being a part of this episode of Business Morning. We'll have another one, the midweek show tomorrow. So join me then. I'm Ini John McQuarrie. Enjoy the rest of your day.